I talk about active sequences. How could you figure out when a new active sequence starts and how to measure it on whether or not it can continue and how to be in a certain approach in order to take advantage of it. We've had 9 active sequences over the course of this past year, from the long to the short side to do a little less side. So with that being said, if you look at the chart of the S&P cash to go over the first potential active sequence and then what we need to look at moving forward, you see right here. So on this day, if you look at the S&P cash, was the first day you had a potential rally attempt. The first potential candlestick to give you clues to cover some shorts, maybe look for a few longs, look for relative strength, look for the leaders, position yourself into a scenario that might be, low risk through options or whatever, but in a way to figure out, can we start a new active sequence? Same way here, this candlestick started the new active sequence to the downside that triggered below this, ascending channel. And then from here on out, the bears had control of this active sequence all the way down to the September 24th lows. Okay, and then right here you had a red dog reversal also, which gave you, a signal to maybe cover your shorts because we didn't break below this area. Then you had a wide range bar to show a little power. And then if you remember, we cleared this descending trend line with a gap up. So this 3-day move was not the easiest to catch, but that's the 3-day move that started that active sequence. So if you missed the first part of the move, how do you catch the next part of the move? Well, if you remember here, you had a gap up that went sideways. Okay, and then right here it tested it and it held it. So right in here was your time to position into some key names to massage your portfolio approach after the start of this active sequence to the upside. All right, so this was October 20th, and this was 33.40. So from 33.40, this move was above the 8-day moving average all the way up to 35.49. So another 200 handles. So if you didn't catch the red dog reversal bottom there, you were able to be involved for a move for 1, 2, 3, 4, 5, 6, 7, another 2 weeks or so. Okay, so from here, if you remember, we had this inside wedge, okay, that wound up resolving lower. So that kind of took that active sequence off the table for continuation. And then lo and behold, we came into the low from Friday. Now, I will say this active sequence was not easy. Why was this one not as easy? Because A, the rally started at 5 minutes to 4 on a Friday. Okay, if you look back, what did it really do? It took out 32.59 and reclaimed it. So that showed you that we weren't heading down to the September low. So that was your day one of a new active sequence. What gave a little bit of conviction or a little confidence that maybe this is the start of something? You had a higher low, right? A higher low above this area. That's what you deem as constructive. And then what happened? You had a move into the moving averages, didn't get rejected. You had a move where tech got a little bit better. So that was your 3-day move. Then obviously, it was definitely hard to have all-in longs or certain positions going into a binary event like an election. So anyway, this now is your 4-day move. So this to me was not the easiest to catch. It really wasn't. And I made some money. I feel like what could I have done different? How could I have had more in the money options? How, any which way, look at it and figure out how you did it. So the question is now, does this move give you an additional move in time back towards perhaps 35.49 or 35.88 or higher? So now could kind of move this up because this is your point of reference. So same way you had this first move up, okay, and then it went sideways for 4 days before continuing. I would think, that this should go sideways in here. While this is going sideways, some of the stocks that just had 3-4 day moves probably consolidate. You could probably day trade. You could probably own some things, buy a dip, let them reset up before potentially maybe showing relative strength and continuing, which I'll get into. So I would say moving forward, in order for this active sequence to be any good, it probably needs to hold this 34.05. It could even fill this gap, okay, towards 30, what is this, 33.89, okay? And by this point, these moving averages that we were below here and below here, we're back above. And if you take a quick look back here one more time, okay, if you remember the last active sequence, that was really, a good one. Basically you had your low, you had the reclaiming the moving averages. So this was like the first move, came in, held, and then it gave you an additional move all the way through July and August. That was a fantastic active sequence. This active sequence, it pretty much started really right here, okay, and got confirmed on this candlestick. I think was my best quarter of my career. It was also led by tech. Before, boom, you had the wide range bar that gave you an active sequence to the downside. So the question is, are we going to get a little sideways action here, consolidate, and then take out 34.86 to retest 35.49 or 35.88. So a little sideways action in here, holding above the moving averages will satisfy my moving average rules. And then perhaps, in that time period is where you see the best acting stocks act better and go. Same way some of the names, that didn't pull back during this last 4-day move post earnings were the first ones to make new all-time highs, like a Google. So at this point, this was your day one, high or low, a little bit of power, follow through. Now you need some time in here to prove it could hold above before maybe going again. So that's like my thoughts on the S&P cash. So now let's talk about 3 or 4 names that I'm going to trade and I'm going to try and embrace and I'm going to try and stay with that are always in my repertoire. Usually it's high beta tech. So the first one I want to go over is the potential new active sequence in Apple. So here's Apple. Okay, Apple is a name that I trade all the time. Apple is a name that I think I've had on my go-to list literally since I started trading back in 1998. So when you get an active sequence in Apple that you could stay with and you could use a tier system, you could buy a dip versus a level, let it go green, add cash or let it reset up, then you get a tradable pattern to add to get some follow through, you can make a lot of money in an active sequence like Apple. Now if you look here, this active sequence, okay, first of all, this is where the bearish active sequence started, and this was in September. Came all the way into first. Finally, you had your low, then you had your higher low. So this started a new active sequence to the upside. Okay, then you had a descending trend line here that it broke above, so you could have, used your tier system to trade around. And from here, you had your first move up, came in, held the moving averages, poked its head above this wedge type pattern, and gave you a move to 125. So from about 105 to 125, that was a 20-point active sequence where the stock acted special, where you could have held it and traded around it. So from here, this is when it got faulty, when it was the first one to go negative and show some active weakness. And then here's when it broke this ascending channel to get me out of my long or just get you away from that active sequence. Okay, and then here it's been to the downside, plus you had earnings. And now finally, didn't show complete relative strength to be all in. But for me, I was like, okay, if we have a president or if tech gets better, if, I want to be in some options. So on this day, I bought the 115 calls for like 2.25 to anticipate. When I anticipate, I use calls because options are risk is premium paid. Okay, so that was into here. Then yesterday, I was like, okay, Apple perked up, but looked a little bit different. Let me take some long. And then I took it into today, and I still have it. And now you have the potential of a new active sequence, okay, versus anticipating. Okay, now what would make this active sequence special? A, it's got to hold above 112.25. Why is this potentially special now? It's back above the moving averages. What does Redler dog like? He likes to be in something above the moving averages. Why? Because glass is half full versus half empty. So now I'm taking home Apple. Apple right now is at 115.05. So if Apple were to open down tomorrow, like just say the futures are down 15, 20 handles because we just ran 100 plus handles, which would make some sense, I would be then buying some versus a level to go green to add cash flow to massage my position that I already have. And then maybe keep it on or just trade it. Then if we go sideways, I would then potentially be a buyer once it takes out 115.59 to see a move towards 117.20. This could take 2 days, it could take 3 days, or tomorrow we get a gap up, it opens above 115.59, I sell some, because that's what I do when a gap is in my favor. I hold some and then I try and buy some back. So this is like a day 1, day 2, maybe you get a day 3 into 117.20, or it consolidates and gives you actually a stronger pattern to buy more shares from. So this right now has the ingredients of a continuation trade, so I'm staying long it. I'll show you 2 more patterns that have potential active sequences that you could potentially hold, massage, and trade around. Another one is Facebook. Facebook, you had a big gap up, all right, held 278, went sideways, pushed above 285.24, and at this point, if this gap, which is kind of like a pro earnings gap, holds, it keeps the shorts trapped, it keeps people thinking they have to get in there fast, so you could be long first 278.60. That's your calculated play. Then, if it goes like tomorrow, just say we open down because maybe whatever the macro news is, you could buy it verse here for it to potentially go green and add cash flow around whatever it is you took home. Then after a little bit of time, all of a sudden today's high is 288.94. You could use 288.94 as your pivot resistance, right? 288.94 is resistance. So where did that just go? So in order for Facebook to go to 304, which I'm not saying it's going to, but in order to do that, it's got to get above 288.94 in order to see that level. But as of now, you're gapped above the moving averages, and the longer we hold above this, the more or the higher the probability it continues. If you look at Google, that showed relative strength and power. If you look here, this gap never got filled while the market was actually just trying to put a bottom formation. So that's why Google is the first FANG type name to make a new high on the year. Look, Google wasn't sold on earnings like most names. It held the post earnings gap of 1601, which was right here, and is up above 1681, which is this pivot. We'll see if it can clear 1726, which would be a good sign for tech. Why? Because it's showing power. Why? It'll create FOMO elsewhere. So now this is 1770. So let's put 1770 in here. That is today's high. So if Facebook is going to follow the footsteps of Google, it's going to have to get above today's high in the future. And for this to continue, now you could see, hey, this has another gap, and we'll see if this digests above here. I missed Google, and which it is what it is. My history with Google has been a little tricky lately, but at least it followed the rules. It held the earnings gap, went sideways. The market finally had a little bit of a push in power. It went to highs first. In August, it didn't get to highs. Amazon went first. Apple went first. So money rotates and things situate. Okay, let's talk about Amazon. Amazon could also have a new potential active sequence to the upside for you to massage and use a tier system with. So here is Amazon. Amazon, why is this a candidate, to have a new active sequence? Well, first of all, it's Amazon, probably one of the best companies in the world. This was your channel. Here's where basically your active sequence to the downside was intact. And then finally today, what did it do? It gapped above the moving averages and held it and showed strength, 31.39. Okay, not only did it break this small downtrend, it has a nice gap to trade against. So if you were long Amazon, potentially this could be your stop, and maybe it works its way back to 32.91. Maybe it works its way all the way back to the highs of the year. Google's already through the highs of the year, so we'll see how this goes. Anyway, how would I, handle tomorrow if I was long? I sold puts because I feel like with the size of this 2-day move, the way I've been trading Amazon, if we were down 20, 30 handles tomorrow, which I'm not saying we're going to be, it could be down 50 points after being up 195. That would only be 25, a 25% move from today than here. I was like, you know what? I'd rather sell options for Friday for $7, $8, and give me some downside exposure. And then if we open down tomorrow, I'll be buying it to go green, and then maybe it takes out today's high tomorrow of 32.44. If it opens up, okay, I'm already short some puts, and I'll keep the premium. If you're long it because you're like, hey, this is a nice big day one gap up, close near the highs of the day. I'm long it. It opens up 30 points. You trim some. If it opens down, you have to be prepared to say, hey, this just had a big move of whatever it did. It should hold 3,200. which is like 40 points. It could still, gap to here and hold it and then go green, and that's how you end and trade around it. And then see if this starts a new active sequence. Remember, this active sequence is started at the red dog reversal here, had a gap up, held it pretty much, went up, then held it again right here, took all the moving averages and triggered above this little wedge formation and gave you a move all the way to 34.96. This was a nice active sequence that started right here with the red dog reversal. So now potentially this gap up could be the ignition for this one. Or not. If all of a sudden Amazon's down 50 tomorrow and then it closes into this gap with a big wide range candle, then it's not a special scenario where you had to just day trade it. But right now it's got to have the benefit of the doubt because of the way the market traded the past few days with the power, with the participation across the board. So that is my lesson on how to look for an active sequence in the indices and how to sustain it and massage it and keep your approach with risk on. And those were 3 names that if this tech rally is going to continue the next 2 to 5 weeks or so or more, then these are 3 names that you could potentially hold, massage, and trade.